Hey, what's going on, you guys? My name is Carson Rouse, and welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be going through the 3 stocks that you should consider buying in April of 2021. Yep, that's right, guys. April is finally upon us. This year is moving by quick. And just a little news, I am quitting YouTube.
Let's go.
April Fools. Except most of you are probably happy about that, aren't you? The stock market is unpredictable, but as of late, it has been calming down. In my portfolio, it's been pretty steady these last few months. I haven't seen any huge gains. I haven't seen any huge losses. For a little bit there, I was losing some money. Now I'm kind of getting back on track, and that's basically how the whole market is done. But anyway, I don't want to waste any more of your guys' time. The only time I do want you to waste is by going down and clicking the like button. It'll really help us out. Thank you. The number 1 stock you should consider buying in April is DraftKings. DraftKings is an American sports betting and sports contest operator. It's made sports betting even more addicting by turning it into challenges where you compete against your friends and the whole nation. It allows users to enter daily and weekly and even season-long fantasy sports contests where you can win a large pool of money with a small entry fee. It's a pretty fun take on gambling, however, it does have some competitors like FanDuel. DraftKings is most definitely a growth stock, so if you're only into value stocks, I'd probably stay away from this one. In fact, in the past year, the stock prices went up 5 times. Currently, the stock is sitting at $561 per share, when at one point in time, it was a near $12 a share. There's always those what ifs in the stock market. What if I would have invested? But you won't be saying that if you invest in it now. Something big to consider about DraftKings and its entire industry is the legalization of online sports betting. Online sports betting used to be very scarce and far and in between, only legal in 1 or 2 states. Now it's becoming legal in a lot of places. In fact, my own state of Ohio is planning on legalizing online sports betting here very soon. Over the November election process, it is shown in many ballots that the American public is becoming more open to the legalization of online sports betting and a total growth in gaming expansion when it comes to money. So great news for the industry, but there's also some great news for DraftKings. They are on the road, the long and winding road to profitability. We can measure this by seeing how much they're losing per share. They used to be losing nearly $4 a share in 2019, but in 2020, they were only losing $2.76 a share. So it's a slow burn, but they're getting there, and I believe they will be profitable within the next few years. In the 3rd quarter of last year, DraftKings did $132 million of revenue in just 1 quarter, which was a 98% year-over-year increase. Overall, they improved from 25 to 30% annual revenue growth. And with all these leagues coming back in order, like the MLB opening day, they're only in store for more revenue growth. Also, they spend a lot of money on advertising. Have you seen the amount of DraftKings commercials all over sports? It's crazy. I feel like every other commercial is DraftKings, but I feel like it's going to reel some people in. Number 2, Pfizer. This is a stock we talked about in March, and we're talking about it again in April because we see so much potential ahead for this stock. Currently, Pfizer is up around 1.5% from the start of this year, while the stock market as a whole did outperform that. Some of their price decreases have been due to bad press about shipment delays involved with their COVID vaccine. Something to consider about Pfizer is that they recently just received orders of over 300 million doses of their COVID-19 vaccine in the USA alone. This is only going to help the public trust in the public view of Pfizer. I mean, they came in clutch for America delivering this vaccine, right? So people are only going to trust them more going forward with their pharmaceutical needs. They also received their 4th quarter earnings report for 2020, and it showed that their sales rose by 12% on the year. A big reason for this is their new emerging market, the rare disease segment. Guess what that is? Corona. They also netted over $500 million, and they're currently paying a dividend of around 4.4%, and you know I'm a sucker for good dividend stocks. Guys, this is a strong, large company that has the public's trust. I would say it's a buy. Number 3, Bed Bath & Beyond. Bed Bath & Beyond is a unique pick for me because I'm not real into brick and mortar businesses when the world is moving to online shopping, but they are expanding much into online shopping. Bed Bath & Beyond sales are currently down around 5.5% year over year, down to around 2.6 million. However, if you dig a little deeper, you'll find that their revenue decrease was due to closing down 120 of its most unprofitable stores. But in my opinion, this is only going to help the company as a whole for the future. It's going to make them more efficient in producing a better profit. Their same-store sales also grew 5% over that same period, and their online sales grew by an astonishing 94%. Bed Bath & Beyond also has an amazing app. It's got a 4.8 out of 5-star rating on the Google Play Store with over 42,000 reviews. Sales of kitchen appliances, utensils, bath and bedding products all grew substantially, and it now stands at 1/3 of their revenue comes from online orders. So while it is still a primarily brick and mortar business, they are keeping up with the times, which I look for in businesses like this. They are strong with a strong brand. I believe in them. Always keep in mind with businesses, not even just like this, all businesses, adaptation, the ability to keep up with the times and be willing to change your business plans and models is so key. And it looks like Bed Bath & Beyond and their management knows what they're doing. Bed Bath & Beyond is also fairly profitable, bringing in around $244 million in operating cash flow last year and paying off $500 million of their $3.6 billion outstanding debt. Facing the liquidity risk ahead, Bed Bath & Beyond is allocating $825 million to buy back some of its shares to increase earnings per share. Guys, those are my 3 stocks that I recommend looking into and possibly buying. Let me know down below if you agree with any of these picks or if you disagree and hate all of my opinions. Anyway, thank you guys for watching, and I will see you next time on Business Buzz.